What's up, everyone? It's Scotty with MoneyVest. So in this video, we're going to take a look at Enphase stock. Enphase is going to report earnings on February 6th. So I will be going over every single thing you need to know earnings expectations wise, and also going over their first 9 months of financial statements to take a look at the revenues, the earnings, the profitability, the balance sheet, and of course the price action. And we'll also be calculating my updated fair value, intrinsic value on Enphase stock as well in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. If you're just joining us for the first time, again, links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos. You can access all the intrinsic values, fair values, watch list, and trading view charts, as well as the trade alerts, binds alerts, options alerts, trade ideas, as well as all the private videos and members only videos as well, with the link down below. And 3 more days left with a couple more spots for that 16% annual discount available. So as we know, Enphase designs, develops, manufactures, and sells energy solutions, and very much in the renewable energy storage space, selling microinverters, right? That's one of their key products. In addition to microinverters, Enphase also offers battery storage, electric vehicle charging stations, and state-of-the-art software, among other products and services. It's actually, in my opinion, one of the best companies out there for renewable energy and for the technology that they offer, because most people that I've actually gone and visited over in the US, my friends and families and their family members, most of the people that have installed solar panels are using some technology of Enphase to kind of manage and oversee the entire energy consumption and manage through the app, and a lot of other microinverters that are being used by Enphase as well. So their technology, in my opinion, one of the best. I actually did a video comparing Enphase with a lot of other companies like SolarEdge, Tesla's battery storage and battery microinverters as well, and a lot of other companies in this space. And Enphase does come out on top on a lot of different variables. Maybe not so much on some of the other ones like storage, but other ones it does kind of fit the criteria and offers very, very high quality products to their consumers. Now, microinverters and battery sales trend. Now, Enphase microinverter volumes have risen dramatically over the last couple of years, but there has been a decline in the third and the fourth quarter. Mostly because of the increase in interest rates, because it's become more and more difficult and challenging for consumers to finance the purchase of solar panels. And Enphase, during their earnings call, also did mention that their volume checks and their third-party sellers are also seeing a slowdown in sales volumes, and because of that, their inventory buildup is significantly higher. So they are seeing more inventory, less sales, and it's becoming more challenging for them to move product. And as a result, obviously revenue and operating margins and cash flows are getting affected right now for Enphase and for its suppliers as well. So microinverter sales volume, as you'll notice, has been declining a little bit, and the driver of the decline seems to be a saturation of inventory levels at the distributor and installer level, which represents Enphase's major customers, and the correction in microinverter and battery volume is visible in the 2 charts above, and such correction is leading to declines in revenues and operating margins shown below as well. So again, it's very, very clear what's going on. Their demand is starting to slow down a little bit, so slowing demand leads to slowing sales of their third-party distributors and installers, and that's creating an increase in inventory levels, which of course is putting a backlog on Enphase as well, and they're not able to sell as much or as frequently, so the volumes are coming down. As a result, revenues and profitability is also coming down a little bit. But I do believe the markets are somewhat overreacting to the idea that Enphase is slowing down or basically declining, because if you come over to the company's 9 months ending numbers, yes, the 3 months ending in September was not the best quarter, because if you take a look at net revenues, they did decline on a quarter-over-quarter basis and on a year-over-year basis. So we only reported, 551 million. That's down from 711 million previous quarter versus 634 million same time last year. So yes, that was a decline. Gross profit was also somewhat flat, down quarter over quarter, but somewhat slightly down year over year. And we did see operating income, if you come all the way down, total other income, and then we come over to net income here, $114 million, which was basically flat on a year over year basis and significantly down quarter over quarter. Yes, the quarter was not that great, and that's exactly why we witnessed Enphase stock price dropping so significantly. But if you take a look at 9 months ending, right, this was the main key thesis that I basically mentioned in our Discord as well, that Enphase is not a bad company, right? It's not a terrible company, because if you take a look at the 9 months ending in September 30th, 2023, every single metric was up by a lot, right? So we had gross profits of 50%. So this right here is the number that I'm going to highlight. So $911 million versus $663 million. Revenues coming in just shy of $2 billion. That's up from $1.6 billion. We had income from operations, so operating income here, $455 million, or almost $456 million. That's up from $291 million. And net income was $418 million. That's up from $243 million. So every single metric, revenue, gross profit, operating income, net income, and diluted earnings per share, $3.06, and shares outstanding also somewhat flat. It was just pitch perfect, right? It was perfect on a 9 months basis, and that was an increase significantly on a year-over-year basis. And now going into the fourth quarter, they're going to report those numbers on February 6th. So that's when the numbers are going to be coming out. And the earnings expectations are $4.40 with a slight decline on a year-over-year basis. I doubt they're going to decline. I do still believe that they're going to be able to somehow manage a somewhat of a profitable year. Profitable year meaning that they are still going to report a profitable growth year-over-year still increase. And revenue is expected to come in at $2.3 billion. They're sitting at 1.988. So 2.3 basically means that they're going to do less than $300 million in revenue, which is actually really, really low. I mean, $300 million, what is the expectation, right? So if you go over to Enphase, if you go over to expectations wise, 336 million is the expectation with 56 cents in earnings per share. So this is a quarter where a lot of Wall Street analysts have kind of thrown their hands up in the air. They're like, you know what? This is going to be a kitchen sink quarter on February 6th because 336 million is literally peanuts for Enphase with 56 cents per share in earnings. Also a significant decline on a year-over-year basis. So we got to be ready. We got to be prepared because earnings expectations are not that high for Enphase going into this quarter. And for that very reason, if the company, let's say, ends up reporting better than expected numbers, there's possibility for a huge spike in the price after hours. But if it's kind of in line with expectations or maybe slightly worse and the guidance for 2024 is not that great, we got to be ready. I mean, we could see sub $100 once again for Enphase moving forward. But that's not the key topic of discussion because short-term expectations should not blind us from the long-term potential value creation for any company. If you take a look at 440 to over $11, if you plug those numbers in, so 440 and $11 and 20 cents, and that's all the way through 2032, we're looking at a growth of just under 11%. Now 2029 is going to be 954. So if you plug that in here, 2029, $9.54, we're looking at just over 13% for the company in terms of that long-term growth. So let's just plug in Enphase here. Profitability wise, let's say 440, and the shares outstanding right now are sitting at 144 million. So let's take a look, 145. So 145 times 440. We are looking at $638 million in total net income, right? So far for the first 9 months, it's $418 million. Let's just plug in $650 million for the entire year. So 650, and we grow them at a modest, let's say 12%, and give them a P multiple of 20, right? And 12% discount rate, 10% margin of safety, share dilution 0, so no share buybacks or whatever. And we get down to an intrinsic value of $86 per share, obviously, which is sub $100, which has seen a significant compression because earnings expectations have come down dramatically for Enphase. Now, if we assume, let's say, a 14% growth rate for the company, then we're looking at just a little bit under $100, $94 to be the intrinsic value for Enphase. I actually did pick up more Enphase, I think in the 110s for the company, and we'll plan to buy more in the sub $100 range because I think this is a very, very conservative estimate because right now the stock's trading at a valuation of about 23, 26, right? So that's again on a forward basis, non-GAAP 24. Price to earnings on a GAAP basis, trailing 12 months, 26. Price to sales trading at a little bit over 5 to 6, and price to cash flow at over 15 to 20. So I think there's potential for Enphase long term, given the 14% growth rate and a 20 times P multiple gives us to a just under $100 in fair value for Enphase, which obviously has come down from 150s from before, but low 100s. For me, is going to be a good opportunity to dollar cost average into this stock, which I do believe still long-term has a lot of potential value to unlock in the renewable energy space, especially when it comes to microinverters and solar panels. This right here, again, is going to be that sensitivity grade. So you can take a look, different growth rates, different multiples, where that intrinsic value might end up being. Right now, considering that Enphase is in the 110s, it's really not that much of a difference. Market's just giving it a slightly higher price earnings multiple while keeping that growth rate intact at 14% for Enphase moving forward. Now, when it comes to the technical analysis, of course, we were trading in the lows of $75, $76. Right now, we're 105. Resistance is going to stay put at $112, $113. And support level is going to stay put down to $92, $93 per share for Enphase right now. So support level is going to stay put and intact here. Resistance all the way up to 132 to as much as 151. And of course, another resistance that it needs to break back out of is going to be $108, $109, with the moving averages, of course, sitting right over here. The 200 SMA, I believe, is going to be at around $120, $130. 137 to be precise, still trading above, of course. So the price action is way below the moving averages. So it's been on a significant downtrend ever since it broke down from 2023 highs. So hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. A complete update on Enphase stock, and make sure that you drop a like. Don't forget to subscribe to the channel. Again, 16% annual discount with 3 more spots left, 3 more days left. Link's going to be down below. We'd love to have you on board. And if you have any questions, feel free to reach out. As always, happy investing. I'll see you all in the next video.